Yeah, okay, thanks. Okay, hi everybody, I'm back now. So hopefully you can all hear and see me now.
All good, Aziza. Can hear and see you.
Yes. Okay. I just wanted to put so Bronwyn has obviously put your the attendance register for you to fill in. The first thing is I just want to go through the agenda. We're a bit late now. Okay, so the introduction, I just wanted to do a brief introduction from 6 to 1840. And then I wanted to go through the theory of accounting. Now, the theory of accounting is very important, although it's not something that we normally test on exams and things, but it's very important to understand and to get the picture of accounting. Then I want to move on to the elements of financial statements, and that will take about 20 minutes. And then I want to do the introduction to the basic accounting equation. Okay. So let's just talk about the introduction. Okay. As Bronwyn said, um, please fill in the register, the attendance register. There's a link. Um, the second thing that I wanted to say to you is that there's a WhatsApp group. Okay. And I need to paste the link when we have a little bit of a break. Um, if you want to participate in our WhatsApp group, I'm going to put the link out there and you can just join. The thing with the WhatsApp group is that, um, remember with the Poppy Act and things like that, it's not always advisable because your number is in the open. But I found that last semester and all my previous semesters that it works so much better. Like, I don't know, for those students that wrote or didn't write last semester, they knew that they could contact me immediately. I could post things on the group, what to do, and in times of an emergency. Um, that's the one thing. So if you want to join, I'm gonna put the group, the WhatsApp link up later. The other thing is on a Wednesday, every Wednesday we will have tutorial classes. Okay. Now, the problem with the tutorial classes is that it's very limited in time. So whatever you have a problem with, you make an appointment with me on a Monday and a Tuesday. We do consultations. They're free and they sort of not private, one-on-one. So you have my email address here. It's efortua@unisa.ac.za. So what you will do is you will tell me that you need to discuss a topic, and if there's two people, we take you together. The problem with accounting is I don't want you to lag behind. We need to keep up with the pace, and accounting is a practice issue. And I found that last semester the teams worked quite nice because you could go back to your recordings, you could do whatever you wanted to, and come back to me with your problems. But we can't go back to topics all the time, old topics. So if we're busy with the accounting equation this week and you find that you don't understand it, you need to then make an appointment with me, okay? And then we sort it out immediately, because accounting becomes a nightmare. Accounting is pen to paper, okay? I want you to practice accounting all the time, and then you'll be the best accountant ever. Let me just see if I addressed everything else. Um, the online exams was a bit of a challenge last semester, so I think going forward this year, the semester, I think I want to end a little bit earlier and we do more type of online practice questions and things like that. But I need you first to understand accounting. Okay. And that's that. Let's just move to the next thing. And we said we will do the elements of the financial statements. People, I need you to participate as well, eh? If you feel that you need to stop me, you can stop me. If you feel that you need to ask me something, um,
Excuse me, were we not supposed to start with theory?
okay. Yes. Okay. Let me just.
Sorry, Aziza, there was a question regarding theory. I don't know if you heard that.
I didn't hear that question. Let me just
So,
see.
sorry, sir, can you just repeat your question?
Sure. Were we not supposed to start with theory and the elements of financial statements
Okay, yeah.
second?
Yes, sorry.
Thank you.
I was actually looking. Okay. So let's look at the theory of financial accounting. Okay, this is very basic. So firstly, what is accounting? Basically, accounting is transacting, recording, and communicating. So when you're transacting, that is basically purchasing and selling. And when you record, that is the documenting of the monetary value of the transaction. Okay. And we then process that into financial statements and then communication. And the financial statements is basically communication to the users of financial statements or external stakeholders or internal stakeholders. So your internal stakeholders is basically the trade unions, the management, SARS, and investors. Okay. So there's various forms of ownership, and they are the sole traders, and that's basically like your plumber or your hairdresser or your one-man band. Okay, partnerships, those are normally your doctors, and they could be one to a few people. Your closed book corporations is that is not in existence. It is in existence, but the closed corporations, no new ones can be formed. Okay, and then the other one is companies. Um, okay, so users of financial statements. So there's internal users and there's external users. Your internal users is normally management, and that is for decision making. Your trade unions, that is basically for negotiation purposes, and employees is normally for to see what the job security is like or to for increases and things like that. External is normally for investors, your creditors, government, basically SARS. So they would be interested. They will be the external users of financial statements. Um, okay. The difference between financial accounting and management accounting. Okay. Financial accounting is basically recording of transactions, preparation of financial statements, and communication to the external or basically internal stakeholders as well, or more external stakeholders. Okay, financial statements must adhere to qualitative characteristics, and that is basically comparability. You must be able to compare financial statements. There's a set format. Verifiability, you must be able to verify it. Okay, it must be timeliness. Okay, you cannot do a financial statement when you feel like doing it. Okay, understandability. The reader must be able to understand it. So you can read up on under 1.6.3 on financial statements. Okay. Management accounting, it's basically mostly related to decision making and goals and objectives of the company. So basically, in a nutshell, this is just an idea of financial accounting, what accounting is all about. Yours is slightly different, but this is just like in a nutshell. Okay, let's move on to elements of financial statements. Okay, So there are 5 elements of a financial statements. Okay. And the first one is an asset. Okay. Then you get an expense. Then you get a liability. Okay. Then you get an equity and you get income. Okay. So the definition of an asset. So basically, an asset is a resource. This is the definition, an accounting definition. It's a resource controlled by the entity as a result of a past event of which future economic benefits will flow. So basically, let's just break this down. Okay. Um, like I have a phone, right? And I want to do this WhatsApp group, right? It's an asset because it's a resource. I can put my phone off. I can decide to ignore you. I can do whatever I want to with my phone because it's my resource. It is controlled by the entity. Okay, exactly what I said. The resource being the phone or the communication, controlled by the entity. I can switch it off. I can break it. I can kick it. I can do whatever I want to, right? As a result of a past event. Okay, so the past event was I purchased it, right? Of which future economic benefits will flow to the entity. So future benefits could be I use my phone to teach, I use my phone to generate income. So this will now form the definition of an asset. Okay. Let me give you 1 minute to think about something and then you people can just answer me. Do you think an employee at a company working for ESCOM, should we use ESCOM, is an asset? I'll give you 1 minute to think about it and then we can just discuss it. Anybody want to go? Anybody? An employee?
Well, yes, employees are seen as assets.
No, can you no, not on the chat group. I see stuff is coming through on the chat. Do you want to maybe talk out loud or what? Can you people hear me? Could you hear me in the slideshow now? Because I see somebody is it meant to be sound accompanied to the slideshow? Could you people hear me?
No, Aziza, we can hear you fine.
Yes.
It's a problem on the student side. But Stephen was just responding to your question about the employee being an asset. Can you just hear him out?
Hello?
Yes, yes, I was just saying that employees in accounting terms are seen as assets because assets
Can you people hear me? Bronwyn?
Hi, Aziza, we can hear you.
Meneer van der Blanche, can you people hear me?
Yes, we can.
Yes, we can.
Yes, we can.
Yes. Yes, we can.
Was just saying that employees are considered as assets, and in accounting terms, assets are company resources which have future economic value.
Hello?
So I believe. God damn. Okay, I'm done.
Okay, I would like
Nobody
to
want
strongly
does nobody want
disagree
to,
with you, sir.
does nobody want to answer or what is it?
I think can you hear me? I'm answering.
Lauren,
I can hear
anybody
you,
say
mate.
something?
Yes, I want to disagree with you because from the definition that we used, there was a word that was highlighted, which is control. I don't think you have full control over the employees. I would think that the employees are more of a liability to the company at some point.
Okay, I see your point, but I disagree.
Okay.
If you don't have employees, you can't create your assets. Therefore, employee is an asset, and your employees create your future assets.
That's okay. But then when you think about it, people would be assets, but their salaries would be viewed as liabilities to the company, or they're because you owe them money at the end of the month, right?
I would like to disagree with that as well. It's not a liability, it's an expense.
Oh, yeah, let's say expense or liability. I'm not sure between the two, but it would be one of those.
Stephen and I think it was Wandile, I'm not sure who was busy debating with each other. If you can try and get, I would like the students just to try and get some more feedback from other students as well that can respond so that you can carry on debating. Aziza, unfortunately, has just had to leave the session and will join again because she's having technical problems. And then what we can do is just round up and sum up what the discussion is regarding the debate. Is it an asset? Is it a liability? Other students,
Can you
oh, there is Aziza
now?
back.
Can you test if I can hear you? Because it doesn't look like I can hear you.
Aziza, we can hear you. Can you hear us? Aziza?
Okay, so somebody says that they can hear me, but now can you people just respond to me or something so that I
Can
can know
you
if I
hear
can hear?
us, Aziza? Aziza, it's Bronwyn. Can you hear me?
Aziza, testing. While we're waiting, just to further my point that
Okay, so you can hear me, but
employees
can you see
are
my screen
assets.
now, at least?
Aziza, can you hear us?
No.
Can you see my screen?
Students, I'm just in call.
No. Yes. Yes.
Okay, so I was saying that assets are something that you invest in, right? So your employees, you invest in them, that's why you pay them. And in return, their assets become valuable, or they become valuable as assets to your company.
I disagree with you because an employee is not an object. You cannot, I believe in investing part. However, an employee doesn't appear on an accounting record or balance sheet. So I would also say go with one deal and saying that an employee is not an asset.
Can hear you. Okay, so the employee, is it an asset? Does it meet the definition?
Aziza,
Yes.
sorry, it's Bronwyn. I just want to come in while you were having your technical difficulties. There was a little bit of a debate between Stephen and Wandile. Stephen is saying that employees are assets, and I think, Wandile, if I can just sum it up for you, you were saying that employees are liabilities. So maybe the two of them, they can just discuss what they were discussing, and then there is also some chat in some chats that have gone on in the chat feed that you can have a look at. Just to recap quickly, if you don't mind, Stephen and Wandile.
Sure. I was just saying that I view employers as assets, because assets are something that you invest in, hence you pay them and all that. And in return, you invest in them, they are assets to your business and increase your net gain at the end of the day.
Okay, and the other gentleman?
Okay, this is one delay. I would, in accounting, I think we don't, if we had to view employees as assets, they wouldn't fully meet the definition of an asset, because the company won't actually have full control over the employees, but their wages. The most important thing here is wages, not the actual people. The wages or the salaries that you pay to them, it's either it's a liability or it's an expense to the company, depending on how you pay that amount or that money. So I don't think employees are assets.
Okay, let's go through the definition. It is a resource controlled by the entity. Okay, and an employee is not a resource controlled by the entity. Slavery was abolished many years ago. Okay, so an employee does not meet the definition of an asset. I know sometimes they talk about human capital is the best asset or whatever, but because employees doesn't meet the definition of a resource controlled by the entity. Okay. Employees, when you pay their salaries, they are basically expenses. Okay, but I'll leave you to think about that further. Okay, so let's move to the next slide. We look at client control. And client control for those people that did accounting at high school. Okay. Client control for those people that did accounting at high school was the old debtors. For the younger people that did accounting maybe 2 or 3 years ago, they called that accounts receivable. Okay. So client control is an asset. Why is it an asset? Because if the person dies tomorrow, okay, they owe you the money. So if somebody comes to my business and they buy cake, right? And they say to me they're having a confirmation or whatever, and this person is going to pay me at the end of the month, but I die. Okay. That means to say that that money is part of my estate. It is still an asset, it's owed to me. Okay. Yeah, that's basically in a nutshell. Let's move on to equipment. Okay, equipment is classified an asset because it meets the definition as previously discussed. It's a resource. Yes, it's a donut maker. It can make donuts on 150 donuts per minute. It's controlled by the enterprise, or it's a resource controlled by the entity. I can switch it off. I can decide to dismantle it tomorrow. I can break it. I can kick it. I can do whatever I want to. Okay. As a result of a past event, I won it. I stole it. I purchased it. I inherited it. Whatever, as a result of the past event, of which future economic benefits will flow to the entity. Okay. Future economic benefits, meaning that um, the the donut machine can make me donuts, so it will generate revenue for me. Okay. Um, I just want to see what this next slide is all about.
Sorry, Aziza, can I quickly ask something, please?
Yes, yes.
So basically, my understanding of an asset is that it is basically a material thing that the company can also sell in the future for economic
Not
benefit.
necessarily, not necessarily. You get yes and no, but it can be an intangible asset as well. So like goodwill, that is also classified as an asset but it still meets the definition of the
Okay.
criteria. But in our curriculum, we only do physical assets. Let me just make another example of this equipment story. So if I have a antique piece of uh, tractor, okay, so the tractor is there, and I love this tractor because I inherited it from my grandfather, great grandfather. It could plow land once before, but now it's an antique piece. So that will generally not form the definition of an asset because it's a resource, right? Um, is it a resource in terms of it can work? Yes. It's controlled by the entity. Yes, I can sell it. I can still throw it away. I can paint it, right? But can it bring future economic benefits to the entity? It's not working anymore. It's standing there as a showpiece. Okay. So then it doesn't meet the definition of an asset because it doesn't bring future economic benefits to the entity. Okay, so you see, it has to meet all the definitions, all the criteria of an asset. It must be able to bring money into the business. Okay, is that clear? Now that I can hear you people.
Yes, it is clear, but if you sell it, does that not bring economic benefit?
No, no, not in the sense that an asset must generate income. An asset is there to generate income. Selling is not generating income.
Okay,
In
so
terms,
basically a continuous income then.
yes, yes, yes.
Okay,
Okay, is
thank you.
everybody clear on that? Okay, so let's move at cash. Move on to cash. I put some pictures in because I think that picture sometimes sticks more in the brain. Okay, so cash is a current asset. You know, normally they say cash is king. Okay, so it's also a legal tender. Okay, now in your curriculum, when they talk about bank, they're talking about cash. Okay, so whenever they're talking about bank, just remember it's cash in the bank. They're talking about physical cash. Okay, so it's petty cash, and also EFTs also form part of cash. Okay, now the thing to note is that cash increases on the debit side and it decreases on the credit side, but that is something I will take you through now in the next basic accounting equation. Um, let's move on to vehicles. Okay, so vehicle is classified as an asset. Once again, it meets the definition of an asset. Okay, so you get a non-current asset and you get a current asset. Okay, vehicles are non-current asset because a vehicle will not get realized in 12 months. Like your current assets are stuff like your debtors, trade receivables, because that you will collect and receive in 12 months time. But anything longer than a year, like your house, those are all non-current assets. And something that I need you to note about in accounting is that we are always looking at it from the business perspective. So don't, people who work in the bank, I think that they have the hardest time to understand this course because they're always thinking about like debits and credits or just leave your whole personal life type of bank out of this whole um, accounting. Okay, just remember we're doing the books from my business perspective. Okay, so when you purchase the vehicle, it will increase on the debit side, and when it's sold, it will decrease on the credit side. Okay, let's move on. Okay, inventory. Okay, so inventory is commonly known as stock. Okay, it's non-current once again because it will be realized in 12 months. Okay, it is used in a business to sell and make a profit. Okay, that's what stock is there for. So examples would be baked beans in a grocery store will be available for resale, right? If you look at houses by an estate agent, that will be classified as inventory because they are selling houses, okay? Which indirectly eventually will be classified as the assets. But basically, if you're selling houses for a business, that will be your inventory and not as much as the fixed assets. right? If you are selling pens, stationery like Walton's, right? Walton's stationery will be something like inventory. But in a normal business, any other business, not like Walton's, that will be an expense. Stationery will then move as an expense, but we'll go through that later. Okay, furniture. So furniture is also regarded as an asset in the business. Okay, once again, all assets increase on the debit side and they decrease on the credit side. Once again, I'll show you again. Okay, income. So income and expenses is something that people always get confused. And the definition of income is that it's increases in economic activities. So don't confuse income with assets. Remember, asset is a resource. Income is increase in economic activities. Okay, income increase your wealth or your equity. Okay, an example of income is fees received, sales, rent received, royalties received. Here's the mistake I was looking for. Dividends received. Okay, let's move on. Expenses. Okay, so rent is classified as an expense. Okay, it is not normally classified as a liability. And I find that people actually get confused with expenses. Expenses is decreases in economic activities. Okay, so expense will be fuel, your water, your electricity, and your depreciation. Okay, now an expense is something that decreases my equity. So you got a house, just now take away the thing that I said you're looking at something from a business perspective, but you've got a house and you pay rent, not rent, water and electricity to City of Cape Town, right? We The reason why it is an expense and not a liability is because if I use it's a running expense, that's the reason. If I phone City today and say, City, I want to cut off my electricity at the end of this month because I'm moving house. Or you tell Eskom that I don't need your services anymore, I'm going off the grid. You then allowed to do that because it is an expense. You pay for what you used. There's no contractual obligation. So that is why I say don't get confused with the liability. Okay. So let's just explain the liabilities. So a liability is a present obligation arising from a past event of which an outflow of an economic benefit would be the result. Okay. So what I'm saying there is a liability is a present obligation. So you walk into Ford, right? And you want to buy yourself a EcoSport or whatever model. Okay. You have a present obligation to pay them 6,000 Rand a month over 36 months at X amount interest, blah, blah, blah. Arising from the past event. The past event was the purchase where you walked off with the vehicle. The outflow of economic benefits would be the result is that I am going to pay them every month 6,000 Rand that's going to flow out of my business. Right. Now, there's a fine line between the asset and the liability because when you buy an asset via credit, then there's two parts of the transaction. The one is the asset, the other one is the liability. It's the same like when you have your Vodacom or your Telco mobile handset, okay? The handset is type of classified as an asset, but the usage is actually an expense part. So this that account is twofold, but when they talk about it in your curriculum, they're talking about the landline. So just leave the whole cell phone, mobile out of your head. Take that out of your what you call it. So when in the curriculum they talk about telephone, they talk about the old landline where you pay Telkom every month X amount for what you used and the whatever. Okay, so you get your liabilities is normally divided into current and non-current. Your current is like SARS and your short-term liabilities, and your non-current is like your home loan or your long-term payment plans that you have. Okay. equity. So equity basically is the remaining interest in the asset, okay, minus the liability. So equity I normally think of as my net worth. Once I deduct all my assets and my liabilities, I get to my net worth. Okay. Any questions on this before I show you the how it actually works, how it actually comes into play?
Yes, on the liabilities, is there a
Mm.
time frame that differentiates between the current and non-current? Like you said, the long term, your home loan, for example. But in terms of like loan period, is there a time frame?
There's 12 months. So
12 months.
anything about below 12 months is current, and longer than 12 months is non-current.
Aziza, sorry, I also have another question. Is
Yes.
liabilities always contractually linked or
Yes.
linked to some sort of a
Yes.
contract?
Yes. So when you're trying to when you're trying to decipher is it now liability or an expense, just remember, did I sign with witnesses? And was there a term? Then it becomes a contractual thing, which is a liability. So liability is basically a contractual obligation. Whereas if you're looking at water or electricity or fuel, okay, those are current expenses. Okay.
Thank you.
Okay, another point when it
Okay.
comes to
So
liabilities, with the wording of the
yes.
actual documents, like receipt versus what's the other one now? I forgot these things. Receipt versus, let me quickly read. Check versus the other one, a receipt. Also count when you're reading the question
Yes. The
or the
question will,
transaction.
yes. The questions, yes. The questions will always guide you. And like when they say paid, you will know it's always like um, either liability or something, or an expense. If they say received, it's either like income. So I'll teach you that now.
Okay.
Okay, so this is basically what you need to have. What I normally tell the students is that you basically can print this, you can laminate it, and when you write on a coat key with it, then you can just rub it out every time. So you don't have to draw it up every time once you're practicing the examples. So this basic accounting equation, assets must always equal equity, right? Plus liabilities. That is always, so if I have a 10 Rand asset, right? I can have equity of 2 Rand and um, liability of maybe 6 Rand. No, sorry, 8 Rand. Okay, and that will equal my 10 Rand. I can have an asset of 10 Rand and maybe 1 Rand and 9 Rand. Okay, so assets will equal equity plus liability. They must always balance out. Now, the nick in accounting is this blue stuff here that I put. Can you see there's a plus at the bottom of this, right? So when you draw this table, you put your plus there, right? You're going to put debit, credit. Remember, for every debit that I have, I must have a credit because that's the double entry. And now we're going to get our accounts to balance. Okay. So for every debit, I'm going to have a credit. All right. I could have a debit and a credit on the same side also. I can have a debit assets and credit assets because in actual fact, when I buy something at the shop, I buy myself a car cash. I'm gonna receive my car and I'm gonna pay cash out of my bank. So on the credit side of my asset, there is always a minus. If you get this wrong, you're gonna get accounting wrong forever. If you get this right, it's gonna be easy. So make sure that the debit, you must be a plus under equity. Under assets, and there must be a minus under. Did we record the second session of the, is this thing recording?
It's still recording, Aziza. You can go ahead.
Oh, okay. Sorry. Okay. So then we go into equity, okay? You get the debit. On the debit side, you're always going to have the minus, right? And on the credit side, you're always going to have the plus. So just note that it takes a reverse effect, okay? And on the liability side as well. So on the liability, it is also a minus and a plus. Do not get it wrong. Do not put plus minus here and minus there. You're going to get the whole equation wrong. And you're going to debit everything incorrect. So if we look at assets, so assets would be land, right? Buildings, okay? Remember, land and buildings is two separate things, okay? Because buildings can depreciate also on its own, okay? So we have land, we have buildings, we have vehicles, okay? We have equipment, okay? We have inventory, we have accounts receivable, we have I have buildings now twice, and we have bank or cash, okay? Equity is all my expenses. So I will have water, I will have electricity, credit losses, depreciation would be equity, rental expenses, and fuel, okay? This is everything that I'm gonna incur in my business to make the business continue, all the expenses, right? Now, on the credit side, here's a plus. So you can see what happens here is my income. So it's fees earned, rental income. Don't get confused with rental paid and rental income. Then I have dividends income, royalties, sales, services rendered. Okay. And this will increase my equity because here's a plus. Remember that capital also increases equity and drawings decrease equity. Then I have my liabilities, okay? So on this side, on my debit side, okay, let's just start on my credit side. It's going to be easier. So on my credit side is all my liabilities that I have incurred. So when I purchase a car, I'm going to increase my liabilities. When I purchase a house, I'm going to increase my liability. When I purchase a bakkie or a truck or a building, I'm going to increase. But every time when I pay that fee to Noble Ford or to Mercedes Benz or whatever, it's going to decrease my liabilities. So let me just show you here. Say I buy a car for 20,000, right? So I purchased this car for 20,000 and I'm paying it over 5 months and 4,000 Rand a month. Okay. The first month I'm going to pay 4,000 Rand. Immediately I can see what the carrying value is or how much I owe. Can you see what I'm talking about? Give me some radio. So you can see I owe 16,000. So this is basically how it works. I purchased a vehicle for 20. I paid them the first installment 4,000. So currently I owe them 16,000. So this is basically how the accounting equation works. But we're gonna have to put this into practice. Any questions on this accounting equation? Okay, for those people that came in late, the attendance register, do you mind just filling it in? Okay, let's look at an example. Has everybody got the study guide out or the study guide? And I want to look at page 18. Okay. Yeah, page 18. It's learning activity 2.1. Okay. So, do you need a minute to get it out or something? Does everybody have it? The study guide?
Yes, I've got it.
Okay. Okay.
Yes.
So my Mine is on page 18. I'm not quite sure if yours is also on page 18, but it's learning activity 2.1, and it's Paddy's servicing. Okay, so Paddy's servicing opened the doors on 1 January 2017. The following transactions took place during the first month of business. Okay, so the first thing is that the owner makes a capital contribution of 20,000 in the form of a check. So I'm firstly not going to do it like we normally would do it. I just want to show you the implications here. I'm just going to mark it all the time with a cross. Okay. So if the owner makes a capital contribution in the form of a check. Okay. Before we do this, let me just rather do a scenario in our head that's much easier to get this accounting equation, because I think it's going to be too difficult to dive into that. Let's say I am Aziza and I bake cakes. You know, those cakes like Just Bake, and you know, those big cakes, fancy cakes, Rolo on top and everything. You get the picture. So I decide I'm going to sell these cakes. Okay. And I'm selling these cakes for 500 Rand each. And I'm going to make a nice profit and I'm going to be rich soon. And you know, the whole wishful thinking. Okay. So I decide the first thing that I need is I need to buy myself an oven, right? And okay, but before that happened, I realized that my grandparents left me a 10,000 Rand in my personal bank account, right? What is the first thing that's going to happen? I'm going to have to remove that 10,000 Rand from my personal bank account at Standard Bank, and I'm going to put it into the business bank account. Hence, my asset is going to increase with a 10,000 Rand because she left me 10,000 Rand. Are you all with me? Okay. And the other side of the transaction is going to be equity, right? Because now I have a 10,000 Rand equity. Okay. Does everybody understand what I just said now? I inherited a 10,000 Rand. My grandma, whoever the estate the executor, they paid the 10,000 into my Standard Bank savings account. I remove that and I put it into my business bank account. What will happen? My business bank account is going to show an extra 10,000 Rand. And at the same time, there's going to be 10,000 Rands worth of equity in my business. So can you see I have a debit, right? And I have one credit. The 10,000 is going to increase my equity, and the 10,000 is going to increase my asset in the sense of cash money. Is everybody clear on that? Any question on what I just said now? Can we continue to bake cake? Clear? Can we move on?
Yes.
Yes.
Yes,
Okay. Okay, so I decided that I need, you know, one of those smeg ovens because they have all the functions and the capabilities of baking these high cakes, you know, with a fan and thermal fan and everything. So I decided to go to Tafelberg Meubeleerders, whatever the name is. And I saw this smeg oven, and this oven cost 4,000 Rand cash. So I say to myself, okay, 4,000 Rand. 4,000 Rand, I'm going to purchase this cash. So what is going to happen now? Let's just color code these things. I am going to remove the 4,000 Rand out of my bank account, right? Hence, there will be a decrease here of 4,000 Rand, right? But I am also going to be an asset richer of 4,000 Rand, right? So once again, I have a debit and I have a credit. Are you with me? Okay. Remember, I said you can have a debit and a credit. It can even be on the same side, assets side. It doesn't matter as long as I have a debit and a credit. I can have two pluses, I can have two minuses, but it must be a debit and a credit. So now I'm 4,000 Rand short in my bank, and I have an asset worth 10,000 Rand. Okay, does everybody understand that concept now? I'm just trying to plot it to show you how way you plot it when you're working with this type of thing. Can I move on? Okay. Next is
Sorry, just a quick one.
yes,
So the money and the stove are both assets, correct?
yes, yes,
Now the increase in assets, shouldn't the 10,000 become less because you use the cash to buy the asset? Because
yes,
at the moment you got 14,000 there. Should that not be 10
yes,
still?
yes. But at the moment, yes, yes, yes. I just want to show you where you're gonna plot it every time. So don't worry about closing it off and how much I have left.
Okay.
So that's why I just color coded it. I just want you to know where we're going to put it on this table all the time. That's why I said, let's just leave that exercise first. Okay, so that's cleared. Now I decided, so I had my first order and this lady came in and she wanted to purchase 3 cakes. And this cakes came to 1,500 Rand. What then happened now?
Increase in equity.
Okay, of how much? 1,500. Let's make that
Yes.
green. Okay, and the other one, the other side, where's the other account?
In assets.
Why is it an asset?
Because it's money coming into the business.
That's it. And that's how you need to approach this every time. Eh? Why? Because it's money coming in. Why? It's money going out. Why? Because it's increasing my equity. And that's how you need to do it all the time to be able to be on top of this accounting. Okay. So let's continue. So this lady, Mrs. Jones, who bought my cake, she told Mrs. Van der Merwe. And Mrs. Van der Merwe also came to me and she wanted to buy a cake of 1,000 Rand because she's having a 21st, but die finansies het 'n bietjie gedruk. And so she asked me if she can buy it on credit. So I said to her, okay, let's see if you pay me. So what do I do now? So she's buying it on credit now, 1,000 Rands worth of cake. So how do I actually record that now? What do I do with that, Mrs. Van der Merwe now?
Is it not a liability?
Okay, why do you say it's a liability? Does it meet the definition of a liability?
I think it's an increase in equity. It would still be a sale.
Okay. Okay, the gentleman said, let's color code that gentleman blue. So he says it's 1,000 Rand. I can't see your names now, so I'm out of the screen. Okay,
Oh, it's
so
a
what is
service
the
rendered
other
still.
part?
Decrease in assets?
No, service. Hold on, services rendered is stuff that it's a service, eh? This would be a sale because it's a physical item. So yeah, just a point to that. What would the next account be?
Assets.
Decrease in assets.
Why? Okay, I hear decrease in asset. Why would it be a decrease in asset?
No.
Because you're letting money out of the business and not letting anything in yet, so it's not an increase in asset as of yet until that account is paid.
No, it's not an increase.
No, I would think
No,
it's
it's
because
no.
stock you're reducing your stock, so your inventory.
Would it not be debtors, Aziza?
Yeah, bo, there's a. Okay, so you also get a blue sticker now. So we're gonna increase. So we're gonna increase our debtors or client control in your case, or debtors or whatever we want to call it. Okay. Can you see that? I'm gonna increase my client control because this person, Mrs. Van Tonde, whatever I gave her name was, she still need to pay me if I die. I don't know if I'm busy dying. I'm just talking about death. So when this lady, so this lady still need to pay me. That is why it's an asset. Okay. Somebody who spoke about earlier about decreasing the asset and that is not in your curriculum. I know what you're talking about, like when you decrease you take your stock out. You kind of right, you got the right thinking, but let's not go there. We're going to confuse everybody because it's not in your curriculum. Basically, when you decrease the asset, the inventory. So let's leave it at that. So we're going to increase our asset, which is our debtors, and we're going to increase our sales. Okay, everybody clear on that and why we're doing it?
I'm not a bit clear with regards to the debtors account. Where does it fall under? Does it increase or does it increase under assets?
It will increase under asset. Remember, it's the same concept. Just wrap your head around when you've got an account at Truworths or Fushini, right?
Okay.
When you go and swipe your card,
Yes.
right? You're making debt. You're making debt. So Fushini or Truworths, they are recording it as a debt sale.
Okay.
So you then owe them money. Okay. You people mustn't get confused between a creditor and a debtor. Okay. A debtor is when they owe the business money. A creditor is when you owe them money. Okay. So it's a debtor because it's increasing my assets because debt is an asset.
I see. Okay. Makes sense.
Okay. So now Mrs. Van Tonde, whatever her surname was, came to me after 3 weeks. I got her pick and page. She said, I was just on my way to you now, and here's a 400 Rand. I was going to come to you, but can you take it now? And I said, no, it's okay. I use my mobile phone and I do my receipt and I pay her and I record it on my mobile app. And there you go. And I take the 400 Rand. How do I come home and record this? How do I record that 400?
So your assets will decrease and your income.
Are you saying let's color code you? What color can we pick for you? You look like a pink person. There's no pink today. Okay. So you're saying that I must increase my asset with 400?
Decrease.
Without. I must decrease my asset with 400. And then and you saying that I must increase my income with 400.
Yes.
Who disagrees with her? By doing this,
It's
you are
already there, isn't
duplicating my
it?
sales. Yeah, exactly. But by doing that, you're now duplicating a sale again. So we didn't make 1,400 rands worth of sales from this lady. Jy's nou skelm, jy
You
wil nou
got
die
it.
vrou nou double bill.
So you got to decrease your debtors.
There's it. So I'm going to decrease my debtors now, right? Because this person now owe me 600 rand only from the 1,000 rand. So I'm going to debit my asset and credit my asset. This asset here, I am talking about my debtors, right? So I'm going to decrease my debtors now. And here I'm going to decrease what am I decreasing here? Wait, now I'm talking
Your
nonsense.
debtors.
I'm increasing my bank here and I'm decreasing my debtors here. Right. Because 400 rand came into my bank account. You with me? Is everybody with me?
Do you leave the debtors at 1,000 or do
Yes.
you bring it down to 600?
To 600, yeah.
At the end, let me just show you quickly because right now, all I want to do is I just want to show you how to, where the stuff belongs. But let me just give you a visual thing of what is really going to happen. Let me just draw two accounts here. Okay, let me make another one here. And Okay, so basically, if we're gonna talk here, my client control, and my client control, we always would have an individual account name, which we gave her was Mrs. Van Tondo, whatever her name is. Okay, and this would be my bank account, right? So when she came in, right, we recorded it here, 1,000 rand, the 1,000 rand, and then our contra account was our income account. Let me just show you. Let me just make another account here. Damn it, man. What is going on here? Is something happening here? Okay, so when we had our income here slash our sales account, right? So we debited our income here, we debited our client control, and we credited the 1,000 rand, am I right? Right? But now she came and she paid the 400 rand, right? So, and our contra account was the 400, right? So if we were to close it off, we will put the 1,000 rand there and the 1,000 rand there, and basically the 600 rand would be what we owe. So you see how it works?
No.
You can't see. Okay, it's no problem if you can't see it.
I think the confusion is that is our spreadsheet's going to look like this, like you're doing right now, or are we actually going to change the debtors in row 20 to 600, or does that stay at 1,000 and then this comes in later, the income sales and
This is what
CC van Tonder?
this is what your T account is going to look at like, and your ledgers. This is basically in the end it will look like that. That's why you can see now, because somebody asked me, but don't you owe 600? Now I'm showing you how you're going to represent the 600. Because that would be the debit side of your account, and this would be your credit side of the account. Can you see? Okay, leave this for so long. You do understand it for till here. I showed you on this chart where to put it. You understand?
Yes.
Okay, so should I move on now? Okay, let's move on. I just want you to know how to use this table for now. This table will then translate to doing your ledgers. Okay. So basically, okay, let's use that example. But now I feel that I need to buy a say a mixer, okay? And this mixer cost 8,000 rand because it's very specialized. So what happens is I don't have the money, right? I don't have the money to buy it cash. So what will happen is I will then raise a liability. Is everybody with me on the 8,000 liability?
Yes.
Yes.
Because liabilities increase on the debit side. Okay. What is the contra account to the liability?
Bank account.
Bank.
No,
Assets.
no. Asset. Why asset? And why not bank?
Because it's equipment.
Because you're purchasing the equipment.
That's it. Equipment, and that will be the 8,000. Because in actual fact, I'm increasing my equipment account. It will not be bank because I didn't pay it. You only say bank if I paid something, not if I bought a liability. If bank only if money entered or left my bank account. So assumingly at the end of the month comes and I pay 4,000 rand on this liability, what then happens on this mixer that I bought? I'm going to
Debit your bank.
decrease debit my bank. Why am I going to debit my bank?
Because
Somebody
you bought
said,
it on credit.
so how's that got to do anything with my debiting my bank?
Because you are paying money out of your bank to the liability in order to decrease it.
Yes, you're right, but you're
That's
also wrong
credit.
because
That's a credit.
you, hold on.
Don't you credit bank?
Yes, you're gonna credit bank because my bank account must decrease. Can you see my bank must decrease? So I'm gonna credit my bank with a, what did I say? It was 2,000 or 4,000. So I'm gonna credit my bank with the 2,000 that I'm paying, right? What color can we go with that? Gray. So I'm gonna credit my bank with the 2,000, right? And what is the contra account to that?
Liability.
Debit liabilities.
I'm gonna debit my liability. Why am I debiting my liability?
The liability is going down. You're paying off.
Exactly. And that is how you need to figure this whole scenario with accounting. Why is it happening? Is my bank account going to increase? Is my bank account going to decrease? Just tell me something. Did somebody put the WhatsApp link on the group? No, yes. Is the WhatsApp link on the group?
No, it's not.
Okay, I'm just going to put it on the group in 5 minutes. So yeah, so you're going to you're always going to have to do it like this. Whatever you're doing right through your accounting, you're going to have to say, why am I debiting my bank? Because something increased. Why am I crediting my asset account? Because something decreased. An asset account will decrease when money goes out, when my vehicle gets sold, when my land gets sold, when my computers get sold, when inventory is decreasing or gets sold, when my account receivable is paid or reduced, then I reduce it. So that is when there will be a decrease in the asset. There will be an increase in assets when I purchase land, when I purchase building, when I purchase equipment. The contra account could be also I credit my asset if I purchased it cash. So if I purchase my asset cash, I receive the asset and I'm going to credit the asset as well because I paid for it cash. I had to take the money out of my bank account. Just think about it when you go to game and you want to buy a lounge suite or something for your wife. You're going to come home with a lounge suite. You're going to pay it. You bought it cash. You're going to take the 20,000 out of your bank account. Your bank now shows 20,000 less. You're not happy after that. If you bought it on credit, you'd still come home with a lounge suite. You wouldn't pay it, but after a month, you get your invoice and on your statement, and then you will pay 2,000 rand per month. Still, your bank gets less, but also your debt gets less. So now you owe them 18,000. So it's the same concept, but you just need to always take it in terms of your business. So let me do another one. So this Mrs. Van Tonde, she actually didn't pay me the 600 rand. Years went by, and she didn't pay me my 600 rand. So what do I do with that now? Who can explain to me that? I'm just going to give you 2 minutes to explain that. Let me just see if I can put the link in while you're doing that.
That would be a loss to the business, and that would decrease the owner's equity.
Okay, so what is going to be my accounts? Where is it going to be? What am I going to debit?
The equity.
Yes, the equity.
Yeah, the equity.
And what's the contra account?
It's gonna be a.
Would it be the debtors? Maybe.
debtors. What about the debtors?
She's not your debtor anymore. So would it be possibly in that account?
Not be a decrease
But
in
also,
equity and assets.
Anything else? Any other? I'm going to write off, I'm going to decrease my credit losses. I'm going to write off as a credit loss, the 600 Rand, right?
yeah,
And I'm going to decrease and I'm going to credit my
services
debtors.
rendered. Wait.
Not services rendered. No, not services rendered. I'm going to decrease my debtors. So now it's going to look like this. So now van Tondas, the 600, right? Plus, so the 600 Rand is going to be the 400 plus the 600 that I wrote off. And it's going to be 1,000 Rand. And I will get my account to null. So now you can see she owes me null when you write it off.
So in other words, your business is paying for her lack of payment.
Yes, you're going to write it off against your losses. Does everybody get that?
Sorry, sis, I just want to make sure. So the 600 Rand gets gets debited at equity and gets credited at assets, but on the actual journal it goes you put 1,000 on each side to zero it out.
Yes, because you're actually going to write off a debt as if she paid it. Because remember, you get the money back sort of in the form of a tax rebate from SARS.
Okay.
Now it makes sense.
You see, so you have to sort of write it off. Listen, this table, it's probably very confusing right now, right? But once you get the nick of practicing with this table, look, accounting is very hard, eh? Counting is not easy. But when you start working and you understand it, it's the best thing ever. You're gonna somehow want to be accountant when you're done. But the thing is, you must understand it, and it's a nightmare if you can't understand accounting. And this whole thing, like I say, if you can just print out, laminate it, you wouldn't have to use it every time, draw it up every time. Make sure that your plus is on the right side. Just remember, on this side here, it takes a reverse effect. So there's a minus and a plus there. So when you're practicing every time your examples, okay, you use this table. Then for now, you just put a tick in like I'm doing it now, just so that we know where on this table it is to become comfortable. Okay. Then when we go further, then I'm going to show you how we do the T accounts. Because in actual fact, a T account is just a it's just a longer version of a T account. I normally just show you from a T account and I just extend it on the sides and show you how I normally do it. But it's a lot of practice and it's a lot of dedication and things. It is 8 o'clock now. I have posted the WhatsApp link. If you want to join the WhatsApp, you can click on it and use the link to join. We will normally, if there's any emergencies, if there's something that you need to clarify, I know people get irritated with WhatsApp groups if it's too many people on it, but we try not to, post anything that's irrelevant. If you need to clear something, we normally use that where students just ask questions, or if you're confused and you want to go over this right now and you want to post in the group, did I get it right or did I not get it right? You're welcome to post that on the group. If somebody else answers it, it's even better. Okay, it's learning. And I've also posted the feedback form, the evaluation form. So if you can fill those out. The attendance register, if you can just fill in the attendance register as well. It was posted sometime. Did everybody fill in the attendance register?
I haven't yet. I'll work on it now.
I have.
Okay, there's a link there to the. Let me just repost. Okay, let me just repost it now at the bottom. So just remember every time you come, if you can just fill in the attendance register. Is there any questions about this? Like I said, if there's two or more people that's confused about what we did today, you just need to let me know. We can arrange 2 or 3 people on Monday or Tuesday. Just to clarify, sometimes I know that there's probably people in the group that don't like to talk out, and I see them typing and stuff. They don't want to talk. That's also fine if you want to be on your own, and you'd want to discuss it with me. That's also fine. You just need to let me know. On the agenda, my email address is on there. So, any questions? Anything you'd like to know about this? And yeah, I think today I had a little bit of technical problems. I don't know why. Any questions? Anything else that you want to know about the course? I don't know if the lecturer is on. I don't know if she wants to say anything. Anybody? Nothing.
Excuse
Nobody.
me. Hi, Aziza. Thanks for the session. I just wanted to know, where will you be posting the recording? Just so I can
The
go.
recording.
Because
I think the
Bronwyn was.
recording will be. Yeah, the recording will be here on Teams. So if you go in there, if you go under FAC1503, I think there's a tab there that says recordings. So then you
Okay.
can go in there and just download it.
Okay.
Anybody else? Anything else? I want to say to you people also that it is actually better if you come to class also every week, because the recordings is not interactive where you will can ask questions and clarify your misconceptions and things like that. So I want you to like maybe work through the study guide, 2.1 maybe, and you use that table that I showed you. So if you can use that table and then just try to do that. Don't look at the answer. The answer in the study guide is something completely different from what I kind of like want you to do. I want you first to understand where the stuff goes. So if you can do that, but don't look at the answer, because the answer is just going to confuse you to what I want you to do. So do 2.1 for me, and then you see if you know where it goes in that table, just like we did it. You can just make a cross every time, or A or B or C or something, to see the accounts, to practice. Anybody else?
Aziza, hi, this is Gugu. Thank you so much for the session. I just wanted to find out with regards to the WhatsApp, I just posted there. My camera seemed to be acting up. Is there a way of joining the group without having to use the code?
The WhatsApp group.
The WhatsApp link.
What is okay? What is your? If you can just send it to me also, WhatsApp. My number is 0813293426. So if you can just send
934.
081329.
Yeah.
3426.
I appreciate
So
it.
then you
Thank you
can,
very much.
yeah, then you can just send me and then I'll join you.
Brilliant. I really appreciate it. Thank you.
Okay.
Thanks.
Anybody else? Can we call it a day? And sorry about the technicalities this evening.
Aziza?
Yes.
Okay.
Would we be able to get a copy of that Excel that you've got with your beautiful debits and
Yes.
credits on?
Yes.
That we can laminate and
go on and
Yes.
erase, like you said.
Yes, if you look under Teams, there's a thing that says files, and then next to under files, you will see it there. It says session 1, and then all the stuff that I use, I will post there every week. So basically, prior in the date before 12, on the day that we have a class, you can go in there and go and download it prior to that. So I will have all the stuff there.
Okay, thanks.
Okay.
Aziza, this is
Yes.
Wileen Daris. Wileen Daris, I just want to check. After I got registered, I just saw the assignment dates, and then I tried. Okay, I see someone is answering. It's fine. I wanted to know, can I resubmit my assignment? Because when the date, I wasn't aware that there's a new date. But I see that Antoinette says here that yes, I can resubmit. Thank you very much. That's fine.
Yeah. Try to do your assignment as late as possible. Not too late that you're going to struggle to get onto the platform. The reason why I'm saying later is better because you will understand it better. And don't worry too much about your marks if you get bad marks because the assignment really only, I know people get demotivated when they get 20% and 30%, but at the time when your assignment is due, we haven't covered the work and the accounting hasn't come together yet. So don't beat yourself up on your assignment, but try your best and try to do it as late as possible, but also not too late, if you know what I'm saying. So
Thank
just
you
have
very
it.
much. Yes, because that was my problem. I did it and I didn't even, because I was just rushing to get it through to the due date. So I'd like to do it over and focus more on it if possible.
So what you'll do now is the questions of the basic accounting equation where they ask you debit this asset and credit that asset. You will try to focus on that now because that is when we what we did now. So you only try to do that section and try to perfect it. So practice and then you go to your assignment on that section. Otherwise it just becomes a nightmare and you get frustrated. Okay. Anybody else? Can we call it a day? Nobody?
I think we can call it a day. If there are any queries, we can ask from the group. Is that okay?
Yes.
Yeah, just
Yeah, it's
looking
fine.
for what's a new due date. Sorry, I know I can look it up, but
15 September.
thank you.
Okay. Thank you. Bye.
Thank you. Bye.
Thank you. Goodbye.
Thanks. Bye, everyone.
Bye.
Thank you so much. Bye bye.
Thank you. Bye bye.